Sometimes the best defense is a good defense. Investors looking for the best stocks to buy before the market crashes can turn to these three blue chips. Coca-Cola. You can't go wrong with this defensive pick that yields 3%. JP Morgan. It's poised to be one of the biggest beneficiaries of recent banking sector turmoil. McDonald's. It's likely to continue dominating in good times and bad. Let's dive in. Worried about a market crash? Buy these three stocks now. Welcome to Timely Investment Research. Worries about a potential market crash are running high after a run on several regional banks has led to contagion fears. While market crashes are rare, they can happen whenever enough investors panic and start selling stocks. With that in mind, today we'll look at the best stocks to buy before the market crashes. It's important to remember that a market crash is not the same as a correction or a bear market. However, in addition to the turmoil in the banking sector, rising interest rates, an inverted yield curve, and other key metrics don't bode well for our chances of escaping a recession. Therefore, whether we see an abrupt fall in stock prices or a more prolonged downturn, it's good to preemptively consider what stocks might offer a degree of safety in a tumultuous market. Here are the best stocks to buy before the market crashes or enters another leg down. Number 1. Coca-Cola. One company that survived a market crash or two over the years is Coca-Cola. Coca-Cola has been around for more than 135 years and is considered one of the world's most valuable brands. The blue chip stock is a great buy and hold investment. Just ask Warren Buffett. He first purchased Coca-Cola stock back in 1998 and currently owns 400 million shares worth $24.8 billion. It's Berkshire Hathaway's fifth largest equity holding. Over the past 20 years, shares are up more than 200%. While this is below the S&P 500's roughly 340% return during the same period, Coca-Cola held up much better than the broader market during the past year. Shares are down just over 1%, while the S&P 500 is off nearly 11%. In addition to providing steady capital gains for long-term investors, Coca-Cola is a dividend play. Shares currently yield close to 3%, and the company has earned Dividend King status, raising its payout for 61 consecutive years. Coca-Cola has continued to grow by expanding its beverage business and branching out into high-margin snack products. The company's financial picture looks solid despite a debt-to-equity ratio of 1.51, which implies debt plays a big role in the company's ability to produce growth. While this has contributed to strong return on equity numbers in the past, given where interest rates are right now, this is one risk factor to consider. Overall, I think investors looking for the best stocks to buy before the market crashes can't go wrong with Coca-Cola. Number 2. JP Morgan Chase. Following the implosion of several regional banks, depositors have fled to the country's largest and safest banks. According to Federal Reserve data, the 25 biggest banks saw $120 billion in deposits in the days immediately following the collapse of Silicon Valley Bank. JP Morgan Chase is one of the banks benefiting from the capital flight. It also helped lead the charge in rescuing First Republic Bank to restore confidence in the regional banking sector. The more than 200-year-old financial institution is the definition of too big to fail. Its size is a clear asset that should help it gain market share if we see more turmoil in the banking sector. On the flip side, it is also well-positioned to take advantage of the next growth-fueled bull market rally. JP Morgan is among the most diversified of its large-cap peers, and it is my top pick in the financial sector overall. Number 3. McDonald's. Rounding out this list of the best stocks to buy before the market crashes is a name that does well in pretty much every environment. McDonald's. Often touted as a recession-proof stock, McDonald's even did well during the Great Recession. That's because McDonald's core product, low-cost fast food, tends to see an uptick in demand during times of economic stress as people look to stretch their dollars further while still treating themselves. Given the inflationary pressures consumers currently face, it's not surprising that McDonald's stock has significantly outperformed the broader market. Over the past year, McDonald's is up 12% compared to an 11% decline in the S&P 500. The company's recent financial performance has been robust. Over the past 3 years, McDonald's has grown its revenue by an average of 3.8% per year, outperforming 73% of its peers. Additionally, its net margin of 26.7% is better than nearly 97% of its competitors. Finally, the stock yields 2.2%, further adding to its appeal as a long-term defensive investment. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.